Good morning. So this morning I will discuss only two topics. So I will show you two sentiment survey indicators, which are showing that sentiment is now quite bullish on US equities, although the trend remains positive. Then I will make an update on US 10-year bond yields, which hit a resistance at 240 and are taking a breather below this resistance. So sentiment survey. So the first sentiment survey I would like to show you is the one calculated by CNN. It's called the Fear and Greed Index. So as you can see on this chart, this Fear and Greed Index is at its highest level in 3 years. So this indicator is bounded between 0 and 100. Last week it almost hit 100, its highest level, so showing a very high level of greed on the US stock market. So you can find this indicator on the following website address. So if we go there, so this is the indicator I showed you. You can find it on the website of CNN. So what I like about this indicator is that it is not a classical survey. It's based on stock market prices, so which is what I like. So seven parts in the indicator. It shows you, it calculates the price trend. So based on the 52-week highs and lows of on the NYSE. So it incorporates an indicator showing the market breadth, showing market momentum, the junk bonds, market volatility, and also put-call ratios. So that's a quite complete indicator. And so as I told you, the indicator is back to its highest level in 3 years. So a very high level of greed according to the indicator. Now, if I look at the second indicator, this one is also interesting, very interesting. So it's calculated by the NAAIM.org, so which is an organization based in the United States. So I'll show you their website as well. So this is the National Association of Active Investment Managers. So what this survey is showing you, so back to the presentation. So this is the net position on US equities of the active investors, which are considered as the most bearish in the survey. So this one is a survey. So each week they ask questions to their members. And what we can see here is that the most bearish investors interviewed in the survey turned bullish on the equity market in late September and are now net long between 80 and 90% of the portfolio, which means that even the most bearish investors are now long on the market, on the equity market, on the US equity market, and they are almost 100% invested on the equity market. So this is obviously a sign of capitulation from the bears on US equities. This is more or less my feeling about the US stock market. So the rally, the strong rally we saw almost every day since late September looks like a typical capitulation move of bearish investors. I'm not saying it's bad news in the short term, but that's an indication that most people are now long on the market, they are capitulating, and they acknowledge that the trend is bullish, and this is from a contrarian point of view something worrying, because it shows that nobody expects anymore a correction on the US stock market. So as you can see, this is the highest reading on this measure since the summer 2006. So I'm not saying it's always a good indicator. For example, in late 2013, it was not a good indication to sell the market. But as you can see, in early 2007, So we had a peak, so a similar capitulation with bearish investors turning 50% long near the market top of 2007. So now, the last topic I would like to discuss is US bond yields. So if you look at US bond yields, I highlighted previously over the last few weeks a very important resistance at 240. So you can see this resistance here. Very strong technical level. So as you can see, we saw a bit of T-bond buying near 240 of yield. And what's happening is the start of technical bonds on the US stock market. So that's definitely a key level to monitor at 240. My preferred case would be further sideways trading or even a deeper pullback of US 10-year bond yields below 240. Maximum downside potential is anyway limited. I don't think that yields will fall significantly lower than 220. Then after that, we are more likely to see a breakout above 240. Thank you for listening and have a nice day.